Welcome to my weekly market roundup, 13th March 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com and follow my live stock and market analysis on my website, YouTube channel, and Twitter page. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems I use for my live trading. They run on Metastock and TradeStation platforms. I'll be using the same systems in today's session as well. That was the last slide. Let's continue with the live system. As usual, we start with a look at the global markets. For the global markets, I'm using Q Global running on Metastock. And as usual, we always first look at any instrument, global market or USA market or stocks, using the weekly, daily at a glance template. Several weeks ago, when the bearish headwind came, I expressed caution, and since then price could not go up. In the weekly chart, the backdrop color has remained magenta bearish for 5 weeks now. I could be cautious looking at the bearish headwind and also the series of indecision at the top bearish candles, orange colored dots, and also the bear release signals coming before that. When price came to the trend line support, I expected it to bounce up little bit, at least that happened. And as explained in the last webinar also, now AXJO is moving sideways, bound by trendline support and trendline resistance. Unless it breaks out of that range, direction is not clear and we may avoid taking new directional trades. Japanese index topics. As I explained in previous roundup, when price came to this point, similar to XJO, I expected a bounce from there. The bounce happened, and here the bounce was stronger than Australian market. Since then, price has gone up. It was supported by the daily as well as weekly trend lines. Even in the last webinar, Wednesday's webinar, when price was around this level, I mentioned that if price continues to go up, we could look for buying opportunities in individual stocks. If you did that, probably you could buy some stocks, fundamentally strong stocks, and have some profit in them as well. It is stronger, more bullish than the Australian market. Weekly and daily, both are bullish in color, bullish in shape, and it is not inside a triangle pattern like the Australian market. Now China market. Remember in the last webinar when price was right at this point. The video is of course on the YouTube channel. Price dropped sharply. It was right at the weekly and daily trendline support, or at least the weekly support. The daily trend line might not be there, but the weekly trend line was there. I remember that. And I mentioned that though Any other traders would be bearish. Q traders, with the benefit of the automatically drawn smart trend lines, memory trend lines in the weekly, would look for buying opportunities. That would be very useful because price went up precisely from the weekly trend line support. This is yet another case where you could use the weekly trend line support to take trades based on the daily interval. The same thing happened in the USA market. We'll look at that shortly. What about the right edge Chinese market? It is going up. Backdrop color is still bearish. If price goes up little bit in the daily chart and tilts down, gives us a magenta color candle, that will give a go with flow short setup. We may wait for that. Long trades. For long trades, we could use the bounce setup that happened when price went up from the trend line support. Now price has gone up for a few days. I will not look for buy setups right now. The optimal time to buy is at the swing low of the market instrument, which happened several days ago. And I could identify that day precisely. You could do that also if you use the trend line supports. Next, UK FTSE index. In the last webinar, I showed that it was inside a range. As usual, unless it breaks out from the range, we don't look for taking directional trades. On Friday, it slightly came out of the trendline resistance in daily. However, in the weekly chart, it closed below the trendline resistance. Looking at that, I will not look to buying stocks in the UK market. Also, the optimal buying opportunities would be at the swing low of the market instrument, not at the point of breakout. Why no? Because price has already gone up for several days, not long range days, but still it has gone up for several days, and the logical stop would be far away. For breakouts, I prefer for the breakout to happen decisively, then price to pull back and go up again, thereby giving me a trend following go with flow long trade setup. I would rather wait for that, and instead of price going up, if it reverses, then using the reversal from the weekly trendline resistance, I may look for bearish shorting opportunities. That will be using the trendline resistance in the weekly and also the trendline resistance in daily. It will be kind of a false upside breakout if price tilts down from here. Right now, I'll avoid taking any trades in FTSE. Lastly, India's Nifty 50 index. This was the strongest for a long time. It is probably still the strongest if you look at the weekly chart. However, as I showed in the last webinar also, at the right edge, it is starting to move sideways. That is very visible also because it is inside the triangle pattern. In the weekly, after displaying the bearish headwind, price could not go above the watermark created by the bearish headwind signal. Instead, the neutral color has changed to bearish color for 3 weeks. This week's candle shape is also bearish. However, there is a trend line support not far away that will make me avoid taking short trades. If we look at the daily, on Friday, price opened with a gap up but sharply turned lower, created a false upside breakout at the trendline resistance that is bearish. However, daily also has a trendline support that is going to not that is not allowing us to take any short trade. So it is inside a triangle, back inside the triangle pattern, and we will wait for clearer direction before taking any trades. Over longer term, all the global markets are bullish. However, at the right edge, several of the global markets are either in a downtrend, like the Chinese market. For swing trading purpose, it is in a downtrend in recent days, or several other markets are in a sideways range, like Indian market, Australian market, UK market. Only Japanese market seems more bullish than the others. Now let's look at the USA market. For that, I will use Q Elite running on TradeStation. I'll use the market ETFs. Starting with S&P 500 ETF SPY. When price was at the swing low in the daily chart, precisely at that time, in fact on this day and also on this day, I suggested buying stocks. I shared several ideas on Twitter as well as on my website. 100% of those trades made profit. They hit the initial profit target. I may add, they hit the initial profit target quite easily. I have seen other people were starting to look for buy setups after price had gone up for several days. But using Q principle of catching the swing low and using trendline support, not in this instrument probably, but in some other instruments. Don't remember if this instrument also had trendline support. But using Q signals, I could precisely catch the swing low and 100% of the trades made profit. At the right edge, it tried to go above the watermark resistance on Thursday, but reversed, displaying a bearish indecision at the top signal. Friday price opened lower but recovered nicely, closed just below the watermark resistance. Weekly is bullish in shape and color both. In Q technique, I like to buy at the swing low and at the swing high or along the way when the risk distance is covered, I like to book profit. I don't like to buy at swing high. Therefore, this is not the point for Q traders to buy. They would have bought earlier, they would have booked at least partial profit and holding on to the remaining positions probably with a trailing stop to see if the rally continues to go up further. Bullish but not at a low risk position to take new trades. Dia, when price was here, precisely here, I mentioned I was not going to short it because of the weekly trend line support. That was very useful. Dia sharply went up. Again, the buying opportunity started at the swing low of the daily chart. Now it is bullish, but it is too far above the swing low, not a point where I like to take new trades. Bullish but overbought. IWM, optimal buy point was at the swing low. After that, price went up almost in a straight line. It is extended now, bullish but not a point to buy. Q traders should have bought much earlier. QQQ, this was lagging. in recent weeks, and this is the only one where the backdrop color is remaining bearish. Price recovered somewhat from the swing low, but it is in a clear downtrend in the daily chart. If price comes down from here and gives a magenta color candle, that will give a go with flow short setup in QQQ. This is the only market ETFs, the only market ETF that may give a trend following short setup if price comes down next week. Other than QQQ, the other market ETFs are bullish. Let's look at the sector industry rotation information using QH. Let's look at the bucket charts. The pie charts are showing that relative to Thursday, Friday didn't change much. As of Thursday's close, 82% of the stocks were above the midpoint of the bucket levels, and as of Friday's close, that percentage increased marginally by 1%. From 82%, it went up to 83%. It is clearly bullish. 83% of the stocks are above the bucket midline. Is it overextended? Not right now. As of Friday's close, 20% of stocks are in the most extended bucket. Since the time this bucket analysis was introduced in QH, I am tracking it in real time, and I have noticed every time it goes to 30% or more, it tends to pull back. Now it is at 20%, so I will not be surprised to see that next week, at least in the beginning, price will go up. The percentage of stocks in the most extended bucket will hit 30% or more or around that before pulling back, if that pullback happens. It will happen certainly. Market will never go up continuously, but before the pullback happens, I am anticipating that the percentage of stocks in the extended bucket will go up a bit more. If you look at the percentage of stocks in the lowermost bucket, it is almost zero. That is showing very one-sided distribution of the stocks across the buckets, these 12 buckets. Just knowing that 83% stocks are above the midline is not enough. We can see that the percentage of stocks are much more in the higher buckets. That is probably a sign of exhaustion, but still I expect this topmost bucket percentage to go up little bit more before a pullback. We'll see what it does next week. In any case, for actual trade, I'm going to use the unambiguous Q trade setups. Bucket analysis shows there is scope for the market to go up further. Now let's look at the very useful 1 month to 1 day sector industry stock advanced decline breadth. It's very bullish, isn't it? In fact, when market pulled back earlier, since then, if you watched this, you could take bullish trades quite confidently. It didn't turn bearish much. Not only the 1 month period, which has remained bullish, it seems forever, the other periods were also bullish, and you could take some low risk buying positions last couple of days. As of Friday's close, this picture is certainly bullish, whether you look at sectors or stocks or industries, and whether you look at 1 day period or 1 month period or anywhere in between. Very bullish indeed. Now let's look at the finder technical breadth. Let me transfer the daily data. I need to transfer that. Give me 1 minute. Okay. Let's look at the Finder weekly picture first. It shows the balance between bears and bulls using the very useful Q technical signals across the universe of liquid stocks. The weekly period, bullish, no question whatsoever. 94% of all signals are bullish, 98% of strength signals, 95% of trend continuation signals, and 85% of even reversal signals are bullish. There is no other way of putting it. In fact, in recent weeks, we have not seen such a bullish picture. And what about Friday's picture? That is also bullish, though not as much as the weekly picture. 76% of all signals on Friday were bullish, 70% of strength signals, 88% of trend continuation signals, and 63% of reversal signals are bullish. All across the four categories, technical breadth was bullish on Friday, and it was even more bullish for the whole week. Very bullish indeed. So other traders may be starting to buy now. Maybe they thought of buying on Friday, Thursday, but Q traders, including myself, bought earlier at the swing lows, and those were the optimal buy points. Before looking at some of the ideas that I shared and how they played out, let's look at the market internals. Is that also bullish? So far, everything we have looked at is bullish. Let's see if market internals are also bullish. Q Mega Cap Top 20 Custom Index. When price was at this point for Mega Cap Top 20, if you remember my YouTube presentations, I mentioned I was not going to buy at that point. And when price came to the swing low at the trendline support in daily and weekly, I mentioned I was not going to short it. Since then, price has gone up. And in fact, in that webinar, I mentioned that even the mega caps are likely to go up. That was the time when I started buying stocks. I shared some of them on my site and Twitter. I remember mentioning in that webinar that not only other stocks but even mega caps are likely to go up based on the very robust trendline support in weekly, daily both. That came true. However, mega caps are still underperforming the market, shown by the relative performance tilting down. That is why I'm not keen to buy mega caps. If I want to buy some stocks, I would rather buy non-mega caps. And there where probably there still are plenty of such trading opportunities. Mega caps last couple of days bullish. Over a little bit longer term it is moving sideways. Relatively weaker but not bearish. Now let's look at, to save time, I'll not look at the internals using daily. Let me directly go to the weekly. I'm looking at the four major indices: Dow Jones, Nasdaq 100, S&P 1500 and S&P 500, and looking at the internals from different angles. First, let's look at the percentage MA calculations. Stocks were 50 MA above 200 MA. That rolled over, came below the average line for Dow Jones, starting to come below average line for Nasdaq 100 also, for S&P 1500 just at the average line, and for S&P 500 also just above the average line. This is the slower of the 3% MA calculations. This is expected to roll over last, and we are seeing some sign of this also rolling over now. The yellow line, that is the percentage of stocks above 50 MA, that rolled over several times earlier for all the major indices. And the percentage of stocks above 200 MA also rolled over earlier. Last couple of days, the studies improved, but it is still not in an uptrend. If you look at the studies carefully, the orange line, yellow line, and white line for all the 4 indices, if you think of higher high, higher low, probably Dow Jones percentage of stocks above 50 MA is now creating higher high, higher low. It is in an uptrend. Not for Nasdaq 100, probably not so clearly for S&P 1500 and 500 also. So Dow Jones is the strongest, and Dow Jones was the index which had robust trend line support in weekly. So that is also coming into play. That is playing out very nicely. The trend line effect of trend line support in weekly for Dow Jones is playing out very nicely. The percentage of stocks above 200 MA, that is also not in an uptrend now, though market recovered for several days. That's fine. We'll see what the market does next. It is extended now for all the 3 indices, QQQ, for the 3 ETFs, QQQ, DIA, SPY. Only, sorry, all the 3 indices, that is not QQQ but DIA, SPY, IWM. QQQ is in a downtrend. We'll see if the market rolls over next week and give us either failed upside breakouts in daily for other ETFs other than QQQ, or gives a go with flow short setup in QQQ. If we look at the advanced decline up down volume, in the last webinar itself I mentioned that the bearish divergence was playing out already, and it has played out now. Already we have a break above the trend line if you drew it across the peak. So the bearish divergence of price and the advanced decline has played out, and same is true for up down volume. Now we have to see what the market does. No indication from these studies whether the market is going to go up next or come down next. And if we look at the total view, market breadth total view, that combines the insight from the 2 composite indices and the 4 major indices, if anything, we have accumulation days both for Thursday and Friday, though the count is 1. Not significant enough to be actionable, but it is still bullish accumulation. And both those accumulations on Thursday and Friday in daily chart is actually for Nasdaq. That means though the mega cap top 20, which is tech heavy, is relatively weaker, Nasdaq has been very strong over Thursday, Friday. This insight probably is not visible from other places. Technology stocks were not down other than mega caps. Nasdaq was the strongest in terms of market breadth. And if we see weekly, it is also showing accumulation count now for 2 weeks. Again, the count is 1, not 2 or more. This week's accumulation count is due to Nasdaq. Previous week it was due to Dow Jones. So this week was very strong for Nasdaq stocks. especially Thursday and Friday. Is that a sign of exhaustion? Maybe, we'll have to see, but I'm still expecting that in QH the bucket, the percentage of stocks in the topmost extended bucket, I'm still expecting it to go up first to around 30% before the market rolls over. We'll see how it works. Again, I will use Q techniques, the actual technical setups, to decide my trades. Bullish but somewhat extended market, not extended enough if you use the bucket analysis. We may look at some stocks. Let me look at one stock that was shared in the Q Skype chat that I started just maybe 1 week ago or so. There are a few traders, very experienced traders, I may say. I have come to know many of them over the years. Some of them I may not know so well, but most of them I know, and they are experienced traders, not only using Q systems but other systems like using other systems like IBD and HSI as well. They are sharing some nice ideas, and I traded one stock that one of the gentlemen shared. Let me look at that. I tweeted about it. I think this gentleman found the stock at the best possible time, and we could all learn from his sharing. So I tweeted about it, copied the stock from Skype group, and let's look at this. This was EHTH. He didn't share the fundamental or industry analysis, just mentioned the technical chart. Let's look at the technical chart first. In the weekly, it created a double bottom at this long-term watermark support that acted as excellent support earlier. Then price pulled back right to that support level, created a false downside breakout associated with heavy volume, and was starting to go up. The weekly created a bullish shape, bullish color, bullish backdrop color candle, displayed a bullish headwind signal, and all these were happening right after earnings. After earnings, price tried to go down few times, that you can see from the long lower tails for these three candles. But as of the time I tweeted about it, the weekly was very bullish in color and shape. Daily also was going up, had a nice trend line support and higher lows, higher highs. The optimal time to buy would have been either using the bull release signal or the bullish flow signal of the next day. It was up for a while when I shared it, but probably it was still not too late. When you look at the weekly chart, it is still very down in the price pattern. Let's look at EHTH, eHealth, as of today. Since I shared it on Twitter, since the gentleman shared it on Skype chat, price has steadily gone up. Even after Friday's close, it has gone up by another 2.87%. This is after Friday's market close, after regular hours. Let's see how much it went up on Friday. Let me add the stock here on radar. On Friday, it went up by 5.5%. After the market close, it went up by another 2.8%. And since the time I shared it, it went up already by maybe 14-15%. I took a long position in the stock looking at the very nice price pattern when this gentleman, I think, if I remember correctly, Sami, shared it on Skype chat. I bought the stock and the stock went up. When it came near the declining yellow direction line, I had made more than 10% profit in a single day. And the declining yellow direction line was there at the price point. So I decided to book partial profit and I'm holding on to partial position. Now, why did I close partial position? That is a decision we all make individually, and some traders might not have booked partial profit. Why? Because the weekly was looking very bullish. It may be just the beginning of a price move. That is also a valid technique. But I booked partial profit because I also looked at its fundamentals and industry strength. Fundamentals were not so great. Let's look at the stock's fundamentals using Q Vital. While it is retrieving data from Refinitiv, we can check out its industry, insurance brokers. Let's look at the relative scorecard. As of now, we can see it is very nicely improving, showing acceleration as well. So as of now, the industry is strong, no doubt about it. And this is a turnaround candidate. As good a turnaround candidate at the industry level as you can get. Excellent turnaround, and you could identify it in 1 second once you look at this relative scorecard. Turnaround with acceleration. Let's look at the fundamentals. This is what I was not so happy about. It was at a very low price level, but it was still not undervalued. I don't mind buying stocks at a lower price point on the technical charts. I actually take a lot of those trades, but I expect the stock to be undervalued at those points, which was not true in this case. Earnings quality was also not so strong, and earnings growth was negative, which was okay because a stock at a lower price point is expected to have lower or negative earnings growth. But the valuation was one thing, still showing overvaluation at a lower price point was one reason I didn't want to hold on to the stock. But I still thought it was an excellent finding in terms of technical charts, and the gentleman also mentioned there was some internal changes in the company, maybe new appointment or some company major decision, etc. In one of the recent webinars, I showed you how you may use Zenith or Icon to find what is actually going on. And Zenith does it very well. Day by day, you can see whether there was earnings, whether there was new appointments, new geographical moves, expansions, new product release, everything you can know day by day. So when you see a price creating a pattern like this, technical pattern, and I may add again excellent technical pattern, false downside breakout, very bullish weekly candle with bullish headwind, in fact bullish pressure also. Daily had a sharp drop but stopped going down and starting to go up. When you see a nice pattern like this, you are able to now study using Q Zenith exactly what is going on. What is going on here, what was the reason of this drop, and you would have found that something happened in this last couple of days. That would give you more confidence to buy, and I did investigate that before buying. Usually I like to buy stocks that are fundamentally strong in strong industries and technically are at a low risk buy point. This was not fundamentally strong, and in fact when I bought it, the industry was relatively not so strong. I bought it during market hours on this day, Thursday, well before market close. Relatively the industry was not strong, fundamentals were not so strong, but I could see the internal changes happening in the company from Zenith, and that gave me confidence in the stock. Still, because of not so great fundamentals and the fact that declining yellow direction line was there, personally I decided to book partial profit, but there was no reason to exit full position. I'm holding on to partial position. This was a stock trade. I think options were not liquid enough, or I might not have looked at it. I booked 10% profit in a single day thanks to this gentleman. Again, I don't want to mistake his name. I think he was Sami. Sorry if I am mistaking the name, but you know who you are. Now, this was not the only sharing. I see some other sharings also in Skype group. Several of them are from IBD. I am not a IBD style trader because IBD tends to take breakout trades. For me, those are high risk points. I probably would have bought those same stocks at a swing low and booked profit at the breakout points. That is my style. But still, these sharings are valuable. I may not trade them, but other people who trade IBD stocks, they may trade them. And one stock that was shared was Boeing. And after the gentleman shared about Boeing, it went up. No doubt about it. On Friday, it went up by 6.8%. So that was a strong move. This is an IBD style entry point probably, when it is breaking out of the watermark resistance. But that is the point where I like to book profit. I would have bought somewhere near the swing low using one of the Q techniques. I could have also bought when it broke out of this narrow range on this day, and that was associated with bullish pressure, bullish flow. That is a valid Q technique. When a stock is moving sideways in a narrow range, breaks out with bullish flow, bullish pressure, that is a valid technique. So I could have bought on this day, or if there was a valid entry point, maybe at the swing low, one of those points. When it came to this watermark resistance, I would have booked at least partial profit. But that is fine, that's Q technique. IBD traders tend to buy breakouts from this pivot, this kind of pivot level. There was no cup and handle here in the daily chart. It was a saucer kind of bowl or saucer kind of pattern breaking out from the previous high. Anyway, this was a IBD style stock. That gentleman, um, his name is Michael. He shared it. He is a IBD trader, IBD style trader. Now, I didn't buy Boeing, but it helped me still, and let me explain why. Whenever I get some stock idea, be it from Q Skype chat, which is meant for people who want to share ideas, not just stay quiet and listen. For staying quiet and listening, there are other chats available, other groups available. I created this chat only for people who want to share their ideas. Now, I may not buy Boeing because my technique may be different, but let me explain how I use any idea that I get. When I got Boeing, my first job was to do a peer analysis and also check its industry. Well-known company, aerospace and defense. Let's check its industry while Refinitiv is retrieving data for vital scorecard. The industry was very similar to e-health, EHTH's industry. It was weak earlier and it was improving with some acceleration. If you remember the picture for EHTH industry, I think insurance broker, that industry was stronger if you looked at that and aerospace and defense side by side. But still, aerospace defense is also accelerating, gaining strength. Q technique allows us to buy. And if we look at the fundamentals again, valuation is not great, earnings growth is also not good. So Boeing was not giving me a Q trade setup in terms of fundamentals. It was not giving me a Q trade setup in terms of technical. So I didn't want to buy Boeing. What did I do? I have the PR scorecard now. I looked at the PR scorecard and first checked which stocks went up on Friday. I used this sort column, sort action button to sort the data by Friday's performance. Boeing is the second stock in the list. Then third stock is ATRO and ASTC is the first stock. But ASTC has overvaluation, not enough data for earnings growth. So I didn't want to look at that. I could not buy ASTC based on valuation, couldn't buy it based on earnings growth. So I didn't want to look at that. It had revenue growth though, so maybe no harm looking at it later. But when I carried out this exercise, my eyes came to the third stock, ATRO. It was undervalued. Not great earnings growth. In fact, the top performers in this list, none of them had great earnings growth in the latest quarter, but the third best performer at least had great valuation. So I looked at ATRO. Industry allows us to buy. Q fundamental scorecard allowed us to buy in terms of valuation. The stock was up on Friday by 6.8%, let's say 6.79, 6.8%. Let's look at its technicals. In the weekly, it has excellent trend line support. These memory trend lines are very robust. Daily also has trend line support. It created a swing low and started to go up. The optimal buy point would have been on this day, Wednesday. You could also buy on Thursday because Wednesday's candle had one upper tail. Instead of buying at Wednesday's close, you could use Q fine tune chart to buy on Thursday. By Friday, it was a bit late if you used Q techniques. Now, if you wanted to hold the stock for longer term, then looking at the weekly, you could buy it. But was that the only reason why I shared it on Skype chat at that time? That though personally I wouldn't buy Boeing, I could buy ATRO. Firstly, the weekly was looking great. It was bouncing up from the trend line support with very bullish shape, bullish color candle. Daily, maybe one day too late. I have to say, using Q technique, one day too late. I should have bought Wednesday or latest by Thursday. One day too late, but I could buy it on Friday in between the day, not at the close. Now, why did I share it in the Skype chat? I wanted to mention that. That is because of the news that I tracked on this stock. Remember, for EHTS, there were some internal happenings, and for ATRO, this stock, at Astronics also, there were some happenings. What was that happening? It seemed important. They were selected by one of the big defense companies, I think Lockheed Martin, if I am remembering correctly. I read this information, the useful information, and then I don't remember the detail. I just keep in mind that there was something significant. What was there? One major defense company. Was it Lockheed Martin? I think so. But if it was not Lockheed Martin, it's okay. The key information was that a major defense company contracted ATRO for one of the major defense programs. Again, I think I remember correctly, it was the Javelin program, but that was not important to remember. Key thing was two things. One, major defense company contracted them and contracted them for a major program. That happened in one of these days, somewhere here. And after that, price started to go up. And when such major events happen that can impact its revenue profitability, that gives extra confidence to buy. That was one reason why I didn't mind sharing it on Skype, though the fundamentals were not so great. So thanks to Michael also for sharing Boeing. I wouldn't buy Boeing at the time when IBD kind of traders buy, which is fine. Different styles are different. I have high respect for IBD style, certainly. But this is how when somebody shares an idea, be it IBD trader, be it HSA trader, any other technique trader, whenever they share a stock, instead of just going for the stock, even if I find a Q setup, I like to carry out a peer analysis first to see is there a better trade in terms of fundamentals, technicals, even in the same industry before taking a trade. And that I did in Boeing, and I thought of sharing that. ATRO looked interesting, especially so when you keep in mind that it entered into a major contract for a major defense program with a major defense company. Now, we saw one stock that didn't have great earnings growth, overvalued, but it has great revenue growth. It came to the top of the peer stocks as of Friday's close. Why don't we check that out? ASTC. This is not giving any Q trade setup. Price is at a lower level and it did bounce from the watermark support. There was a trade probably somewhere here using the bounce setup or the box setup. Box setup could be taken using the bull release signal. However, though daily met the checklist conditions, weekly would not meet the checklist conditions. So we could not apply the box setup. We could take a bounce setup when price bounced from the watermark support. It was associated with heavy activity. So if you are following ASTC, you would have bought. Let me check whether this day was closing at exactly the same price as previous day's price. I know that from the volume bar, activity bar being in yellow color. If this was not yellow color bar, green bar, meaning if this candle closed just slightly above where it closed, then we could have a bounce setup right on this day. This was also a bullish indecision at the bottom kind of candle. We could not buy it on that long lower tail candle. We could buy it probably next day or next day. Next day the bull release signal also came. That would be the last day we would think of buying this stock. After that, we would not buy it. Q technique would not allow us to buy because prices already moved up significantly from the recent. In any case, if we look at the chart pattern, ASTC, at least to my eyes, is not as attractive as ATRO. Keep this in mind, ASTC, and let's go back to ATRO. This is looking much more bullish to me, steadily going up in an uptrend in weekly and daily both. Novice traders I have seen tries to buy stocks that are not in an uptrend. Experienced traders buy stocks in an uptrend. Now Q technique of course has an advantage. A stock may not be in an uptrend, but using the powerful reversal setups, box, bounce or headwind, we may buy a stock at the bottom or we may short a stock at the top. But if those reversal setups are not available, then the trend following setups are better than taking a long position in a sideways market or declining market. So ATRO was one stock that I traded based on the Skype chat input of Boeing. Found ATRO from peer analysis, and EHTH is a stock that I traded based on another gentleman's input. Now let's look at Disney. See, the market is very bullish, no doubt about it, and Dow Jones is the strongest of the market ETFs. But do you remember Disney? In Wednesday's YouTube live session, I saw at that time weekly had a bearish headwind. Now weekly price has changed, the headwind is not there. I don't remember where the headwind was there. Let's check Q Global. Okay, I don't remember there was bearish headwind or not at that time in weekly or not, but there was, currently we can see there was a bearish headwind at this level, a watermark. Price tried to go above the watermark, created a false upside breakout with bear daily signal. At that time, I mentioned that I would not mind shorting Disney. Now see, market has gone up since then, and Daya is the strongest of the market ETFs. But see, Disney has not gone up. So if I traded it, which I did using verticals, I either have a small profit or a small loss depending on how I structured it. And I am continuing to hold the position in spite of the market being so strong, being the strongest. I am expecting to come out with at least a small profit in the stock. And I'm thinking that because of the relative weakness of the stock. And you may review the last webinar, Wednesday's webinar, to see how I could identify the trade, even a short trade in a strong market. And so far it is working out well. I don't mind taking loss in a few trades. So I wouldn't mind taking loss in this trade, but I doubt if I have to do that. We'll see. Now let's look at one stock that I shared in forum. I have not looked at any of the long trades that I shared recently. Let's look at a trade that is closed now. Kroger is closed. I shared Kroger long setup that is closed at initial profit target. Another trade I shared, PFSI finance stock. Kroger KR is a food retailer. Kroger is a food retailer. PFSI, I think personal finance, financial sector stock. And what is this stock? We'll look at that. FE utility stock. I'm still holding on to that trade. It was a bullish trade again. It's in profit. In NDM also made a profit. DKS, Dick Sporting, also made a profit. And what was this trade? FLGT, interesting. Okay, FLGT, I shared a long idea. Okay, let's go through it and I'll close today's session after that. It was a pullback setup. the industry relative score jumped up, and from being a negative performer one day ago, in real time, the red bar I saw, it jumped up by almost 4%, the industry percentage performance, and it gave a pullback setup. On the technical charts, the industry was one of the strongest with second most acceleration. And FLGT, well-known stock, excellent earnings growth. That day the peer stocks were strong. The stock was up by 9.4%. And I looked at the chart, nice pullback in weekly, daily, regained the yellow direction line and starting to go up with bullish color. The reversal was associated with high volume. So I took a long trade, and see how using the Q techniques, Q systems I would say, and carefully tracking the stock, I exited the trade with a profit. FLGT, right? I shared it, and I think the very next day. Let's scroll up. I first shared it 4 days ago, 9th March. 9th March, and my follow-up post was on 10th March. So the very next day, I was looking at the stock using Q fine-tune chart. Here is the 10-minute interval. In real life trading in the morning session, I was using 5 minute, but let's look at the 10-minute interval. It was starting to go up. So we had a pullback setup on this day, and I bought the stock. Next day, price actually opened here. Price opened with a very small gap up. You may not be able to see. Price opened at the blue pivot, which was just above, slightly above green pivot. So it had a small gap up open. After that, if price goes up, we have a gap long day trade setup. If price goes down, we have a gap short day trade setup. Now in this case, price came below early range low. It also came below previous day's close. So it gave a gap short setup, and in real time, I mentioned that I exited FLGT with a small profit as the stock came below early low along with QQQ, the technology stocks. FLGT is a high-tech stock, high-growth stock. So I could exit the trade with a profit, not only because I was looking at FLGT, but looking at the market breadth inside. This one using Q Elite in real time, where I observed the Nasdaq NYSE market breadth as well as the market breadth of the four major indices: Russell, Dow Jones, Nasdaq 100, S&P 15, S&P 500. Looking at that, I saw the weakness in FLGT and exited it with a profit. I know some other traders might have bought FLGT but didn't exit. Now, was it just luck? Look at FLGT today. I exited it with a profit on 10th March, entered it on 9th March, and let's look at FLGT today. I entered it on this day using a pullback setup. I entered it not at the close, sometime during the day. So I had some profit at the close, and next day price opened with a slight gap up, then it was starting to go down. So I had still a small profit in the trade. I exited the trade with a profit, and that day had a severe reversal. You can see the reversal here, dropped with heavy bearish pressure, and after that Thursday, Friday also it is not able to go up, though the market went up. And in fact, Nasdaq is not weak. QQQ is weak. Mega cap tech stocks are weak, but Nasdaq is not weak. Thursday, Friday, Nasdaq as a whole is the only component of market total view that gave accumulation count 1 on each of those days, Thursday, Friday. But see, FLGT didn't go up. Now, is it just luck that I exited at the right moment? That is not so. Yes, of course, luck may play a role, but if you follow all my trade ideas and how I manage them, it's a lot of practice. Not hard work, but lots of practice. You may do the practice with real money, or you may do the practice by walking through the charts day by day, apply the unambiguous checklist, and learn how to trade before you actually risk your trade. Or you might also take trades with small quantities. Nowadays, many brokerages allow share trading without commission, so it is possible to trade very small quantities and still come out with a profit. Once you practice that, practice makes perfect, and you will not just think you came out because of luck. Again, luck may have a role in that, but it is because of practice you have. Now, FLGT is one stock that I was tracking, and I think I bought it at the right time, and I did exit at the right time also. There is a trend line support nearby. If it reverses from here, I don't mind buying it again. If it reverses from the next trend line, I wouldn't mind buying it again. And there is another trend line support that would be far away. Remember, first time I shared FLGT was around $34. Then it went to $200. Now it is around $100. So if somebody held on to the stock when I first shared it, there would be no reason to let this huge erosion take place. Q traders wouldn't allow that, and they may look for buy setups like I did, and they may be watching it again. And I'm watching QDEL also. QDEL, okay, give me 1 minute. Let me close the session after discussing QDEL very briefly. I have been tracking QDEL since this earnings gap. Earnings was not poor, but still it gapped down. But since then, it has not given a Q trade setup. So I'm waiting for it. Now I see it is at the weekly watermark support. If it reverses from here, it will create a false downside breakout. I see possible signs of exhaustion. However, there is a trendline resistance in daily. So I will wait for that to be broken before taking a long position. QDEL is also a very high growth stock, just like FLGT. So I may be thinking of re-entering FLGT when I have a Q setup, and also waiting for a setup in QDEL as well. I didn't go through the other trade setups on forum, the long setups that I shared recently, but all of them made profit, and I could catch them right at the swing low, not after market has gone up for several days. This technique works very well because the risk is very narrow, and by the time other people are starting to notice and buying, you are able to book partial profit because risk distance is covered. Market is bullish but little bit extended for my liking. I will watch how the market moves next week before deciding my new trades. I am continuing to hold several long positions. I have booked partial profit in them. I am also holding a bearish position in Disney that I shared. I will continue to post ideas on Twitter as well as on my site. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in our next session that will most likely be on Tuesday 8 p.m. Eastern Standard Time. Thank you once again. Keep safe and trade profitably.